following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time, 30 minutes to go until the start of the day, and we have a mixed market so far. We get the S&Ps negative by 7 points right now, trading at 4,060. Quite a price tag on the S&Ps. Across the board, we get the NASDAQ 100 right now, down about 2 points, 13,584. The Dow, negative 72 points, 33,344. Made it above 33,500 on the futures yesterday, and we get the Russell right now down 1 point at 2261. The Russell pulling back yesterday when you had all the other indices accelerating higher. Bitcoin down $510 at 59,330. We got some news in crypto over there. You have Ethereum, which is used for those smart projects, smart tokens, smart contracts. That is the term. Ethereum trading up to $2,100 overnight. That's a new high. Ethereum is the one that is used for those NFTs, non-fungible tokens. Crypto is accelerating in a big way. You got Bitcoin holding steady right at around 60,000 this morning. Crude catching a little bit of a bid after quite the acceleration to lower prices yesterday. Look at that sell-off to 57.63. We were trading at 61.50 Sunday night. We give up $4 in the price of crude to 57.63. We bounce from that level. We're up $1.25 on the session right now, right near $60 on crude. We get the gold contract up $6 at 17.35. We just hit 17.40 this morning. Silver is up 27 cents. We're trading at 25.04 in silver. And notes and bonds, we got a little bit of higher price and lower yield. We got the yield under 1.7%, sitting right at 1.69%, the 10-year. Up 8 ticks at 131.12. We got the 30-year up 16 ticks at 156.03. And let's jump over to the VIX. Volatility index, we're trading 1746. Quite a price tag on that VIX. Market continues to set records almost on a daily basis right now. We got the VIX at levels that we haven't seen since prior to the pandemic. You're talking about a low towards the end of Thursday's action when we really accelerated higher, 1729. You put the VIX on a daily. I've been talking about it. We got a bunch of highs, we got a bunch of lows, but that's a breakaway low there on the VIX. Look at that gap. From where we were in terms of the VIX trading on March 31st, we open on April, and we gap below those levels, below any of the lows that we've made since the COVID pandemic. I mean, remarkable. We're in April right now. You got to back things up more than a year to see the full escalation of the VIX up to 85.47. But, man, we're in new territory in terms of back to VIX prices we have not seen since the middle of February. 1746 doesn't mean we're out of the woods just yet, folks. We got a lot to happen in the next few months in terms of the economy catching up with where we were prior to the job losses and the closures hurting the economy. But nonetheless, VIX 1745 this morning. All right, jumping around to the stories we got. So this morning, we'll start it off with the IMF. So 8:30 this morning, the IMF upgraded its global economic growth forecast for the second time in 3 months, while warning about widening inequality and a divergence between advanced and lesser developed economies. It's a tough one, folks, when you think about the wealthy economies versus the poor economies in countries across the globe. You're seeing it happen, not too surprising. In terms of vaccinations, whether it's the U.S., right, whether it's in Europe lagging dramatically, but nothing compared to in terms of the poor countries where sometimes vaccinations haven't even begun yet. The global economy, strong numbers, though, in a big way. You're talking about 6%, the global economy. The IMF is looking for it to expand this year, up from a 5.5% pace that they estimated just a few months ago in January. That would be the most in 4 decades of data. Not surprising when you look at the drop that we had, though, of course. I mean, we haven't seen a drop like that going back 4 decades as well. We haven't seen a drop, period, right? Oh, we did. Going back to 2009, as we were seeing that collapse. We pull back, we accelerate higher. We're going to see a number that we just saw. That was the decrease in terms of 3.3%. Now we're looking for potentially 6% for the year Yes, for the year coming up. And next year, they'll be looking for 4.4%. Strong numbers. U.S. with some strong numbers in there as well. Of course, stimulus putting a big boost in there. For 2022, the fund saw global growth at 4.4%, higher than the 4.2% they had been looking for. They get into here. Many advanced economies will not return to their pre-pandemic output levels until 2022. Not surprising when you think about it. We just lost 10 million jobs, folks, from where we were about a year ago. It's going to take a little bit of time to catch up to those numbers. Emerging market and developing economies, not surprising there. They're going to lag behind. The world economy in 2024 will be about 3% smaller than anticipated before COVID-19, the IMF said last week. So that news out this morning, putting a little bit of a bid potentially in the markets. We'll zoom in on the S&P. We'll pull it up on a 5-minute. We'll zoom in on the action. And 8:30, there's a little volatility. We got an initial spike upwards to 4,066 on that news. We dropped down to 4,058. We got about 19 minutes to go until the opening bell. So far this morning, we're trading at 4,061 in the S&Ps. All right, what else we got going on? Jumping around to some of the stories we got this morning. We got to talk about Credit Suisse. Whew, my goodness. Surprising to see that just yesterday, folks, Credit Suisse is still selling billions of dollars of the position that they have been caught up in because of the Archegos, is that how I pronounce it? Saga. So the bank offered Viacom, VipShop, and Farfetch shares in blocks just yesterday. Shares in the three companies. Now we'll pull up Viacom shares, and there you see the sell-off, right? We closed at about 43. We trade to 40.99. We're trading at 41.69, down about $1.30, $1.20 so far this morning on that news. We'll jump to the other one of note, Discovery. A little bit of a sell-off going into the closing bell as well, but remarkable what is going on at Credit Suisse. I got 3 articles up here that I was reading this morning in terms of what they're going to be doing. So they're talking about a $4.7 billion write-down. Okay, you got 7 executives. They're going to be pushed out of the firm, and they should be, because you're talking about a week later. What is going on? I mean, were they really trying to play a bounce in these stocks or something like that? I'm not sure. But the Swiss bank hit the market with block trades tied to Viacom, VipShop, and Farfetch. The stocks traded substantially below where they were last month before the office blew up. So they unloaded $2.3 billion worth of stocks tied to that more than a week after some rivals dumped their shares. A week. A week is like an eternity in the market. What is going on over there? They have yet to provide investors with an update on the extent of the hit. Now, this article, I believe, is last night. Maybe this one provides a little bit more clarity from overnight. So you have the risk chief. He's gone. Not too surprising there. You got a bunch of others as well. So they're going to take a 4.4 billion franc or $4.7 billion U.S. write down tied to that implosion, almost $5 billion. They got big problems over in Credit Suisse. And the next article has to do with a completely different saga, which is the next segue in terms of the Greensill losses that they might try and shift off to their clients. The charge was out, and this is talking about the $4.7 billion write down. And a loss of about 900 million francs for the first quarter. That's going to put them on track for its second straight net loss. They scrap bonuses for top executives. They're going to cut the dividend, suspend share buybacks to protect its capital. Investment bank head and chief risk officer Laura Warner. So that's a woman. She is gone. You got the chief executive officer. We're going to finish this up, folks, because it's remarkable. I would stay away from Credit Suisse. I can't believe this can happen this day and age. It took them a week to try and sell some of those positions. We'll be right back, folks.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I'll personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have the S&P's negative 7 points right now. We get the NASDAQ 100 negative by 5. We get the Dow negative by 71 points. Markets marginally in the negative right now after quite the acceleration of higher prices yesterday. Let's jump over to our man, Kevin Hinks. Folks, at 11 a.m. Eastern time every day, Fast Market by the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team breaking down hypothetical trades, talking about the market action every day. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. You know, I think that today will be a really interesting day. We're a little light on economic data, although we just had a great Red Book number come out just before 8 o'clock. But yesterday's trade was all off of Friday's non-farm payrolls report. Now, but within that non-farm payrolls report, Tommy, it was a very muted inflation data. And so with the market as strong as it is, you've got a 10-year yield that has drifted back now down below 1.7%. So I think this market, with good vaccine news, good economic data, good U.S. consumer data coming out of the Red Book, you know, the red that's in this market right now, this market absolutely could consolidate today. But, you know, short of Jerome Powell coming out in tomorrow's Fed minutes and saying something to upset the markets, this market looks in really good shape right now, Tommy.
Yeah, I mean, all things in context, right, Kevin? You put it well. We're in negative territory, but you're in negative territory by 6 points in the S&P with the futures trading at 4,061, right? Quite a price tag. I get the chart up on the Thinkorswim platform. You put it on a daily basis, and you don't have to be an expert technician to see the uptrend channel that we are in a big way, man. So, yeah, big jobs number on Friday last week, even with the market closed. And what I was thinking about, Kevin, I'd love your take on it because it's going to be really interesting. You talked about, you know, yields coming down. Of course, the inflationary data in there as well. That's so important with the Fed in terms of their new 2% target, whether it's a soft target. They're going to let things go potentially a little bit higher. It's really an interesting dynamic that we almost got 1 million jobs added for the month of March. So when we come to the month of April, of course, non-farm payrolls, when we come into May, you know, there's going to be some lofty expectations, of course, now that we almost hit 1 million jobs from March. April should probably be better if the vaccinations continue to roll out. Hopefully that service economy opens back up as is expected. What's kind of your take, Kevin? Because what I can't wait to see is what happens when, do we get a number that's too good, right? And then the market worries. It's kind of this dynamic, this dichotomy of things are so well, and I agree, and we haven't seen anything about inflation that should spook the markets, which is why we're at 4,061. But my head goes to next is we're in this phase of what happens if things start heating up too good, Kevin? Does the market really, is there such a thing as too good that then maybe the worry of the Fed creeps in as we come in the next, 2-3 months as this economy really starts to roar, which I think it's going to?
Well, Tommy, here's the good news. If you're looking for some data on how healthy the U.S. economy is, you're about 8 or 9 days away from getting it as earnings season start again. And the banks will lead off earnings season. And I'll tell you right now, the banks are going to have massive numbers because not only trading and investment, but net interest margin is going to go up massively, and they're going to be able to take loan loss reserves and put them back on the bottom line. So, the banks are going to lead us off, and these are going to be some pretty gaudy numbers coming out of the banks. But expectations are high. And so then you get into some earnings, and we're going to get a really good test of how healthy this overall economy is. And I'm telling you, Tommy, right now, watch for the retail sales data coming out very soon, because these short-term high-frequency data on the retail sector that we get from Redbook every Tuesday, these numbers are massive. And it's got to lead to a big retail sales number coming up in about a week here.
Pretty cool, man. I can't wait. I mean, just my own personal feeling, right, in terms of being locked down for a year and, just ready to go out and do as much stuff as I can, man. It seems like this pent-up demand. You almost can't even put an estimate on it because we've all kind of been so bottled up for so long. These banks, I mean, like you say, so they kick it off really next week in a big way. I know because of you, man, banks, they kick it off. That's earnings season. Right. And like you said, really some big expectations. I got a chart of JP Morgan. I mean, we were just trading at 100 in November. We're at 153 right now. Bank of America was just trading at 24 in November. We're at 40 right now. It's quite a world that we live in, Kevin, where sometimes these expectations, we saw it many times over the last, couple months, right, where some of these stocks that really accelerated higher, they delivered pretty well in earnings season, and it's so tough maybe to accelerate higher when the market is great at pricing in some of the future expectation, of course, of how you're going to do, and we get to find out next week. Hey, how about the Archegos saga? It's just on my head. You heard me talking about it maybe coming into the break before your segment. Yeah. Pretty remarkable. Some of these banks in particular, Credit Suisse, of course, all over the headlines this morning, that a week later, Kevin, that they're still selling off positions from a risk perspective, with everything going on. It's just remarkable, isn't it?
It's surprising, but it's just as surprising that Tommy, if you've been in this business long enough, people get greedy and people put on positions that are too big and too levered and not fundamentally sound. And this market, this sounds like a very morbid comment, but this market will go where it can hurt the most people. That's what happened in GameStop when you short 140% of the stock. This is what the market does. It senses weakness in certain areas. And so this is why you always have to respect the markets and trade with respect. And, when you get these positions that are irresponsible, this is what happens. And we've seen it. I've seen it throughout my career. I mean, long-term capital. Think about this. The inventor of the stock option went bankrupt trading options. I mean, this is
mind-blowing. I hear you.
When things get out of whack. So, Tommy, this is not surprising. It's just surprising that it keeps happening with all the risk management tools we have nowadays.
Yeah, and I think they're going to do quite an overview over at Credit Suisse with a whole new executive team, maybe down the line, at least on the risk aspect. And you put it well, man. I was going to add to, greed is quite an emotion. And, I was talking about on my show last week saying, folks, you always want to try and learn from your own mistakes, right? In life, whatever it is. It's even better if you can learn from somebody else's mistake. And, man, we've seen it a couple times because GameStop, exactly. It's like these guys and girls who are managing this money, they're obviously brilliant, Kevin. Bill Huang, obviously a brilliant guy, but we can all get caught up in greed, man. And we see it over and over and over. And it's just, maybe insane isn't the right word, but it seems insane in hindsight because of some of the risks that some of these brilliant people, but greed, man, quite an emotion. And we all got to keep that greed in check when we're playing this game in the market with real money at risk. Kevin, we appreciate the update as always, man. We look forward to the program coming up at 11 o'clock Eastern time.
Thanks for having me on, Tommy.
Thanks so much, Kevin. Take care, man. Folks, tune in every market day, 11 a.m. Eastern time. Fast Market by TD Ameritrade Networks. Kevin Hinks, Alex Coffey, and the whole team. Great program if you haven't checked it out. And we got a lot going on in this market, folks. As Kevin said, we're negative. But, boy, we're negative by 6 points, trading at 4,061 in the S&Ps, right near the all-time high. Stay tuned, folks. We'll be coming right back after the break. Give us a call. Still time to chat. 877-927-6648. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find a newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we got the S&Ps negative by about 7 points, right where we were pre-market, trading at 4,060. We got the Russell sneaking into the positive on the open there. Russell now positive by 3 points at 2266. NASDAQ 100 down about 20 points right now, 13,565. Let's jump around to some of those tech stocks. Quite a day yesterday, accelerating higher. Amazon shares trading at 32.35 to the close of yesterday. Not that long ago, folks. You put it on a 5-day. We were trading at 3,028. You're talking about $200 to the upside on Amazon just in the last 5 days. Take a look at Microsoft. Look at that acceleration from almost 242 to 249. Microsoft down about 0.5%. Google shares, they got some good news yesterday when the Android versus, was it Oracle saga? One of those battles over there in terms of the code. I think it was Lycos. Nonetheless, Google accelerating to 22.37 out there. I covered Microsoft, Facebook shares, right? Charging higher to 310.77. We're back at 308.77. Tech stocks, quite a day yesterday to the upside. And you take a look at that NASDAQ 100. Man, quite the acceleration to 13,622. You put this thing on a daily, not that far off from the all-time highs. Yet again, look at this roller coaster. Down to 12,200 on March 5th. And just like that, folks, we've gained 1,300 points. That's more than a 10% run, basically in the last month. That's March 5th. Today is April 6th. We're up 10% in the NASDAQ 100 since that time frame. And now you're only talking about, we're about 340 points from the all-time highs in the NASDAQ 100 at 13,900 made February 16th. All right, getting back to the Credit Suisse trade just for a moment. So we talked about, they're talking about a $4.7 billion write-down on the Archegos hit. They're replacing 7 executives, I believe it is. Now you jump to the next saga, and this is why really, folks, I mean, remarkable. Jumping over to the Credit Suisse chart. Now, what's interesting is investors were probably fearing things could be even a little bit worse, because look at this action on the news that they were still selling last night. You spiked down to 1042 on Credit Suisse. We're up to 1084. You're down about 3 pennies, so we're basically flat on the session. You put this thing on a daily, though. We've fallen out of bed from about 15 bucks to 13. Now we're trading under 11 on Credit Suisse to 1084. But interesting when you look at, so the Greensill losses. So this is a completely different saga. They had clients in there talking about funds that the bank ran with former billionaire Lex Greensill's company, according to people familiar with the matter. The bank considers that the risks around Greensill were known to the funds, were only marketed to investors able to assess such risk. What's so interesting about this article is that just last month, executives suggested they were considering compensating investors hit by the collapse of the funds. Credit Suisse marketed these funds, so this is not Archegos again. This is the Greensill saga, all right, which is not getting enough attention right now because the Archegos saga is so tantalizing. But Credit Suisse marketed these popular supply chain finance funds as among the safest investments it offered because the loans they held were backed by invoices usually paid within a matter of weeks. Folks, there's no such thing as a safe investment if they're paying you more than a 10-year treasury. If they're paying you more than a government, U.S. government loan, all right, then there is risk associated with that return. So often people say, I can, I'll tell you a story, folks. I was chatting with a financial advisor that was working with potentially my mom. So I got him on the phone, ran him through it, make sure everything was all right, chatting with him, right? And I believe the expression was, I can earn 7% a year standing on my head or something like that. Yeah, that guy was gone the next day. Anybody talks to you like that ever, okay? It's just malarkey, to put it in no better terms, all right? When they're talking about the safest investments they offer, and then what happens? The fund blows up. Why does it blow up? It was a $10 billion strategy, and what did they do? They strayed from the pitch, and much of the money was lent through Greensill Capital against expected future invoices for sales that were merely predicted. Predicted. Folks, that's like saying you get a predicted pro forma spreadsheet and then you take out huge loans against it. It's just a plan. It's just a hope. And you had all these people putting all this money in, and they're just predicting sales that are going to come. And guess what? They didn't come. Investors in the frozen funds are left facing the potential for steep losses as the assets are liquidated. What I found most interesting about this, though, is that just a month ago, Credit Suisse was saying, you know what, maybe we'll make these investors right. And they only would have done that if they felt they had done something wrong, right? Credit Suisse is not in the business of handing out free money to people that make bad investments on their own part. So just last month, they were talking about maybe making these investors whole. Why would they do that? They probably did that for their own self-interest, thinking that they had made decisions that were going to tarnish their company if they punished investors because they shared in some of the responsibility for those losses. Well, fast forward a month later, and Credit Suisse is in deep trouble. And so they don't have time to try and make nice with the investors that they steered into risky funds. They're now saying that those investors should have been aware of the risks, and they're probably going to push that hit off to them. Just buyer beware, folks. Anytime you see investments out there that they market as super safe, if the returns are anywhere near, above guaranteed Treasury notes, then the risk is associated. That's how it works. The bank may be able to limit the fund losses to around $1.5 billion, assuming insurance pays out. Nonetheless, just remarkable in terms of the shift going on there. And then we jump to Goldman. Really remarkable when you look at the divergence of some of these companies. So you got the Goldman CEO out there, a little bragging rights, and he should have bragging rights. They were doing business with Archegos, and they sold off their positions. Meanwhile, you had Credit Suisse selling off their position yesterday. Not sure how that one makes sense, but Kevin Hinks summed it up well. Greed is quite an emotion, folks. And like I said as well, you always want to learn from your own mistakes. It's even better if you can learn from somebody else's mistakes, folks. And these are brilliant people. All right. I don't know Bill Hwang. Never heard of him before a couple weeks ago. He's probably a brilliant guy to be able to do what he does, to have the experience that he has. But we're all prone to human emotions, folks. All right. And greed is always there. It's always there. Keep it in check. Keep your risk in check, because you never know what's going to happen around the corner. You think bets that you make have a 95% chance of success, a 98% chance of success, right? If they talked about GameStop and somebody said to you, what are the odds that GameStop goes from $20 to $100, let alone $4.80? What are the odds GameStop goes from $20 to $80? The Wall Street traders were saying there's a 0% probability of that. The term I like to use, folks, of tiny percentage probabilities, when you can't quantify something and it's a very low risk, right? Maybe it's a 0.5%. Say, what are the odds that GameStop goes to 100? Well, it's like 1%, 0.5%. Well, what I like to say is it's a probability somewhere over 0%. And that means it can happen. And you better plan for all available outcomes when that outcome can be so dire. You have an outcome where if things go bad, you go bankrupt and you lose everything you ever worked for your entire life. Folks, you don't ever want to put yourself in that type of situation. And you see these brilliant people on Wall Street doing it all the time. Not sure why a gentleman worth $10 billion needs to risk his entire net worth to make that extra $10 billion, because the difference between $10 billion and $20 billion, yes, maybe you get to go start a charity. Maybe you get to help more people across the globe. Maybe that's why he was doing it. I know that Bill Hwang ran a charity out there. Seems like he was pretty philanthropic. But guess what, folks? He's not doing it anymore. Not happening. Greed got the better of him. And all those billions, they ain't going to anybody in need because they went to the market. All right, folks, stay tuned. We're going to be coming back. We get the S&Ps down just 4 points now. We're going to get green by the time we come back. A little bit of an acceleration. Stay tuned, folks. Give us a call. Still time to chat. What are you looking at this morning? We'll be right back, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the S&P is negative by just 3 points at 4,064. We'll call it basically flat, sitting at all-time highs right now, right near that level. Talk about an acceleration. We get the NASDAQ 100 barely negative by 24 points right now. The Dow negative by 48, and the Russell catching a little bit of a bid, up 10 points right now at 2273. We jump to notes and bonds, hanging out pretty much where we were in terms of coming into the open. We're up about 9 ticks right now at 131.19. You check out where we are in terms of yield. You're looking at a yield right now, 1.69%, pretty much right where we were when we started off the program. Jumping back to some of the stories with stocks moving, Illumina, the life sciences company, they're up almost 10% today. So they issued preliminary current quarter and full year guidance, exceeded current analyst estimates, said its projected results are being driven by record orders in its gene sequencing and related businesses. Gene sequencing, man. We are cracking the code to the human body, folks. You're seeing it with some of the vaccines. You're seeing it here with Illumina, up 8.8% to $418. We put that thing on a daily. Quite the acceleration we got in February, up to $555. You give it back to $364, I think was the low, $364. And just like that, we're up a bit to $418.71 on Illumina. Look at that volatility on that chart. My goodness. What else we got going on? Snapchat. Let's see if they're continuing to hold the gains they had. Snapchat shares getting an upgrade overnight. Snapchat, yeah, we're up 6.5%. That's quite an up. We were as high as 73.59. Volatility in a big way. Back to 50 this morning. We'll put it back on a 15-minute. You got Snapchat charging higher, up 6.5%. So they get an upgrade from Atlantic Equities for overweight. From neutral, the firm cites valuation as a key factor, as well as Snap's transformation from a messaging-centric platform to a broad content platform. I do use Snapchat myself occasionally. I don't understand how people benefit from the ads. Maybe there's something where I'm seeing enough of those ads, but I see it completely different from a company like Facebook where I'm really not clicking on any ads. All I'm doing is I'm swiping, I'm clicking, I'm moving past them as quickly as I can. But nonetheless, people are paying, and Snapchat positive this morning. We talked about Credit Suisse in a big way. Moderna, so they struck an agreement with contract manufacturer Catalent to nearly double output of their Moderna's COVID-19 vaccine at their Bloomington, Indiana plant. That continues to be a good story. I mean, the numbers are pretty stark, folks. I bring them up. That's why you get the market sitting at 4,060 in the S&P. Saturday, we did 4 million vaccines alone. Almost a third of the country has received their first shot. I got my first shot, I think, a couple of weeks ago. I got my second shot coming up a week from today, April 13th. I encourage you, folks, get out there. The vaccines, they are safe. They are effective. That's how we're going to get over this thing. The worry, of course, is as we get to the younger generation of Americans and, of course, over the globe, that you're going to see a little bit tougher adoption of the vaccines. Hopefully, as people realize that you're talking about hundreds of millions of Americans out there, that it is safe, it is effective. When you look at people covered, some states as high as almost 30% of their residents, covered. The U.S. right at about 25% there when you're looking at where we are, and you get into the numbers. It is a rising trend in a big way. We're at over 3 million vaccine shots a day, warranting, of course, where we are in the markets, basically at all-time highs in a big way. You check it out, S&P is continuing to creep higher, folks. We're now flat, we'll call it, down less than a point at 4,067. The highs we had last night, we're just 7 points away at 4,074. All right, checking out what else we got. So crypto, I referenced this at the beginning of the program. The cryptocurrency market value tops $2 trillion for the first time. Man, we've come a long way from the beginning of this. Ethereum hit a high of 21.51 on Tuesday morning, Singapore time, according to CoinDesk. Ethereum's up over 180% year to date. Bitcoin gets all the headlines, right? They were first to the party. They're the base currency in crypto, basically, Bitcoin. The biggest digital currency accounts for over 50% of the entire crypto market. But, geez, the other way to say that is that Bitcoin is just basically over 50%. That means the other cryptos are making up close to 50%. Ethereum, the big driver there. Now, Ethereum is what is used for smart contracts, and Ethereum is what is used for NFTs, which has been all the rage recently, non-fungible tokens. Nonetheless, this market's on fire, folks, and you're getting to a point that there's no putting the genie back in the bottle, as they say. I mean, when you got the world's richest man or second richest man at a price point of saying $1.5 billion Tesla has put into crypto, you have PayPal facilitating transactions, it's getting more and more difficult for regulators across the globe to shut down the growth potential of some of these cryptos. Doesn't mean that they won't face some headwinds, and it does not mean, I mean, the U.S. is not going to be okay with their money supply being controlled by crypto, as in uncontrolled by the central bank. They're not going to be okay with not being able to track financial transactions. Really interesting to see when that comes to the limelight in terms of when regulations potentially become on the forefront of trying to basically, stop the growth of crypto so that governments can get control of their currencies. Yet again, that's the whole fascination with cryptos, that governments supposedly can't control them. But I would watch out, folks, because there's going to be some volatility when governments potentially put some regulations on cryptos. And we really haven't seen that yet. And I imagine it's coming at some point. Checking in on some of the commodities, you got crude so far up about 1.5% where we were starting the session. Checking out gold, catching a bid, continuing. We were just up to $17.41. Gold's up about $10. Checking out the VIX this morning. Volatility index right now sitting at 1802. A little bit of an elevation, a little bit of volatility on that VIX as it tries to decide what is an appropriate level, with the S&Ps sitting basically right near all-time highs. All right, what else we got? Some of the other equities we got moving this morning, jumping over. United, so it looks to be airlines. They're getting people back. The headline was Delta is bringing people back as well in terms of their pilots. You have United opening flight school later this year in a hiring push, plans to increase diversity. United said it plans to train 5,000 pilots in its flight academy over the next 9 years. By 2030, aims for half of those students to be women or people of color. The airline plans to hire 10,000 pilots over the next 9 years. That's quite a number. The airline bought a flight training academy last year, but COVID derailed the training plans. Yeah, I would say so. United shares higher by about 1.3% this morning, putting it on a daily. There's United. You got to back it up, though, to find where we were in COVID. You were trading at 90. coming into COVID. You spiked to 1780. We're sitting at 60. You're still 33% below where we were to start the COVID collapse. On United, Delta Airlines so far this morning up 2.5%. Delta a little bit closer to where we were prior to COVID. And you check out the domestic airlines, even basically higher than where we were. You got JetBlue up 3.1% so far this morning. Southwest up 2.06%. Look at Southwest. Southwest above where it traded at all of 2019. But you're going to see it, folks. You're going to see a resurgence. Can't wait to fly up to Boston, bring my new son up there, see the family, right? Go vacation, see my family, see my friends. The pent-up demand, as we talked about it over and over, folks. Pretty remarkable. Almost hard to quantify how much pent-up demand might be in this economy right now. All right, folks, stay tuned. When we come back from the break, still time to give us a call if you'd like. What are you looking at this morning? What are you trading? Give me a call. 877-927-6648. We got the S&Ps right now. Negative by just 1 point. Look at this weekly. Is that a pullback? I don't think so. That's a one-way rocket ship to the upside, folks. You put it on a daily, one-way rocket ship to the upside, and we just pushed over that high, 4,074. That was the overnight high. We're trading at 4,066 right now. Stay tuned, folks. We'll be right back in 3 minutes.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And just like that, folks, markets are positive. We got the S&Ps positive by 3 points right now, trading at 4,070. We're up a solid 10 points right now from where we were on the open. The NASDAQ 100 up about 3 points, and we got the Dow negative by just 4. Taking a request for our man Baseball in the YouTube Tigers Den, taking a look at Good RX. GDRX is their symbol, up about 4% right now. Not sure what's going on this morning, but it's accelerating higher, putting this thing on a daily. Looks like maybe we went public just in September. Good RX, of course, prescriptions, right? A nice business plan for them in terms of being able to save on prescriptions. Talk about some volatility on their earnings especially. Now, anytime you get a company going public, the earnings, there's a lot of volatility because they're not quite sure of the estimates in terms of what they're looking at. They're not sure how to quantify the growth of some of these companies. So we go from 35 up to 60, back to 35. The only thing I'll look at here in terms of where we are, so we got a lot of volume at the lows here. And that's the one thing I'd be really worried about. You go back to where we were in November, tremendous amount of volume on these low numbers. You rise up to the highs. I mean, we're talking about at some of these highs, we're only trading 1.4 million, 700,000 on February 9th. Trading, 1.1 million, 1.1 million, 700,000, right? You get to the lows, whether it was 8 million we traded after the earnings in March. You get to the lows we had March 24th, you're talking about a 5 million share day. The actual low of 33.39, 8.3 million shares traded. And then what do? You start rising on 2.8. You rise on 1.9. You rise on 3.8, you rise on 3.1, you rise on 3, and yesterday you rise on 1.5 million. So keep your eye on that. The level I might look to, you're going to face a little bit of resistance here as we reach the top of that gap. That gap is 46.55, also correlates right at the 50% retracement level of this rundown we had. So 46.56, somewhere in that level, you might see a little bit of resistance in Good RX. And we'll wrap it up with a national title. Not a huge basketball fan, but last night I tuned in early to the game, and thank goodness I did because it was almost over by the first TV timeout. Baylor gets it done with a national title. Gonzaga, quite a season. They go into the title game undefeated and not quite got it done, but Gonzaga. Credit to them for a great season. Credit to Baylor for their first national title. Gotta love the competition out there. Stay tuned, folks. Basil Chapman's coming up next. Then we got Fast Market, Steve Rhodes, Dave White, Tom O'Brien, Larry Pizzavento at noon.